Steve, many thanks for making time to speak to us. Great numbers, if you ask anyone.
Yeah, we're pleased. I guess we look at EBITDA as sort of the indicator of underlying performance. That's up 10%. If you look at the crude rate, it was up about 25%. So could have been a little better. We did have some issues in terms of a long shutdown in Secunda, but we're pleased with the numbers.
Crude rate, fascinating that you actually do bring that up. It's interesting that spot prices for crude have actually not been performing particularly well, but on the other hand, we haven't seen the crude side of your end that buoyant. Tell me why the mismatch here?
So we've looked at where we think the market will be. About a year ago, we released our strategy and what will we see the world doing in terms of crude. We see crude bouncing between 50 and 70, and if you look at the 6 months, that's about what it did. We base our forecasting off a $60 to $65 Brent crude going forward. And I would say you're going to see volatility in this market going forward. I think there's so many factors at play, you can't really predict exactly where it's going to go. So that's why we use that range in terms of our business.
Stephen, many of the South African market watchers, analysts, and, well, I would say shareholders were at the presentation, were very taken back by the Lake Charles project, you know, yet another extension, now talk of close to 700 million added onto the budget. This is a massive capex, Stephen, and just give me a sense of where the 700 million is actually coming from.
Okay. So you're right, this is massive, and it's a game changer for our company. It represents about 50% of the market cap of the company, just to give you an idea of how significant it is. We've been working on this project for about 6 years. It's 94% complete. You know, you always have challenges with projects like these, but in the middle of the project, you have time to regroup and be able to offset some of those things. Near the very end of the project, we found some problems in the metal that although we had quality control at the manufacturer, we actually found it when it arrived at site, and that caused us to have to stop and do some rework. Also, the rain that we had in the fourth quarter was far more than what we had scheduled. We planned to work 5 days out of every 7. We were only able to work about half that amount over the fourth quarter. So that pushed the schedule out, that pushed the cost up. We're disappointed in that, but the fundamentals of this project have not changed. And by FY21-22, this project will be generating about $1.3 billion per year of EBITDA. So it's massive, and we're ready to get it up and get it running.
Stephen, what many of the shareholders here want to hear is, with that kind of generation, will it actually be reflected on the dividend payout come that time?
Yes, what we've said is our balance sheet is really stretched right now. We're using the debt to finish the project, so our gearing has moved up. It's currently at about 48%, and we want to bring that down to 44% or below. That inflection point will probably be mid-fiscal year 20, and as we start to delever, then we'll have the ability to start increasing our dividend. But we won't be able to do that until we start to delever the balance sheet because we're just too tight. So right now we're staying at the 2.8 cover. As we delever, we'll start increasing that.
Stephen, if I'm a long-term kind of investor, and I'm looking at Sasol 20 years, not 3-4 years, would an investment like Lake Charles be reflected as one that would deter massive capex investments for the long term, at least the next 10 years? Is this a kind of investment that would actually have you sitting back and you say, you know what, let's kind of regroup before we look at such massive investments in the next 10 years?
Yeah, so what you're talking about is what we call capital allocation. So we're going to be generating a lot of capital. We're going to delever, we're going to pay off our debt and start to delever. Then you have a choice. You can do M&A. You can, of course, increase your dividend, which we will do. You can do more growth. So that's the sort of decision that we're looking at. And what we've said is it's unlikely that we will do another project of this size again on our own. We might consider something like this with a partner or two, so the amount to us would be less, the risk to the to the balance sheet would be less, right? So I don't think you'll see this kind of step out again just by ourselves.
M&A, that's of course a very interesting topic, and I just want to touch just pick your brain on your strategy here, because there's always this debate. M&A might give you spontaneous growth, exponential growth, but it's not organic. It's more inorganic as opposed to waiting it out and having organic growth. Just give me a sense of where Sasol sits on this particular front, at least in the next 5-10 years.
Yeah. So most companies have a balance, right? You're going to do some M&A, generally at the size that's appropriate for your company, and some organic. Now, we will continue to have organic growth. A company like ours, which is an industrial company with mines, with the Secunda operations here in South Africa, chemical plants around the world, we're always going to do some sort of organic growth. But the question is, inorganic, will it provide you an opportunity to move into, let's say, a product area that's complementary to what you do, right? And we actually haven't done much M&A for the past 15 years. So we believe we need to kind of rebalance, look at small M&A and small organic, especially until the balance sheet gets in a good spot.
Let's talk about news that took the South African market, it was quite rattled at the beginning of the year. Talk of the discoveries of just off the shore here in South Africa, oil and gas maybe. Is Sasol going to have a role in this particular discovery?
We currently aren't in that particular field. We do have licenses for offshore development, but the field you're talking about, we currently aren't one of the players. It's a great find if it's able to be developed. I always tell people, a exploration well is what you need to first discover the reservoir to see if it's there, and there is something there. Now we have to find out how much is there, how difficult will it be to produce. We probably have a 10-year cycle in front of us before you really are developing and pushing large volumes onto shore. But it is a great find. Hats off to Total, who is the lead. So it bodes well for South Africa, and that's fabulous.
I was just going through some of the numbers here. There's an allocation here for $70 million US on time extension. Could you just walk us through some of this? Because you do touch on it, but it's not particularly clear. The $70 million US time extension, allowing for 2 months of construction delay and 1 month concurrent commissioning delay. Okay. What did this actually entail?
So this is back to the project in Lake Charles, right? So we were trying to just help people understand the different big factors that pushed us to extend the schedule and to increase the cost estimate of the project. So the current range that we've said we should be able to deliver this project is between 11.6 and 11.8 billion. And so there were some real difficult engineering issues that came up late that we had to take care of, and so that was part of it. A project this size is not all finished and then you start up. You finish some of it and start up while the other is still finishing. So you have concurrent activities that are ongoing. That's what we were trying to talk about.
Stephen, when do you break even?
Oh, when do we break even on the project? That's a good question.
Because if we're to put this in context, this project is bigger than the GDP of a country like Rwanda.
Yeah, it's probably about an 8-9 year payout project, right? So we'd like it to be faster. It's really dependent upon what the price in North America ethane does, and if that stays low, we can shorten that breakout period, that break-even period.
Finally, Stephen, before I let you go, President Donald Trump, he comes in, is very pro-coal, very pro-shale gas actually coming onto the market, and one might argue this is a kind of a presidency that is very good for your line of work. Just give me a sense of whether or not there's a tailwinds coming from the White House at a time when you have such a massive project actually underway.
Yeah, we've been asked that before. There is some tailwinds. We haven't had many headwinds. The The one thing that he has done that really affects our business has been to restructure the tax regime in the U.S., and he lowered tax rates on the corporates to try to attract more business into the country. Yeah. That affects us as one of the corporates there. The rest has been, I'd say, neutral to us.
Stephen, many thanks for making time to speak to us. Welcome. That was Stephen Cornell, who's the Joint President and Chief Executive Officer over at Sasol.